In this video, I'm going to show you a simple strategy that you can use to make money trading, whether that be stocks, crypto, commodities, anything. So, before we get started, it's important to, I recommend this app called TradingView. So if you don't have it already, I would download it. Now, TradingView is great for analyzing charts. I look at it every day. Let's take a look at some examples here to go over this strategy. Again, it's a very simple strategy, but it's highly effective. Okay, and this strategy works best for swing trading, which is basically holding positions overnight. Multiple days, can be up to weeks, months. It's going to work best for swing trading. Okay, so here we're looking at Amazon. You can see that I've drawn these zones. Up top here we have the resistance supply zone, and then below we have support demand zone. So let me explain these terms because it's important that you know them if you want to be a profitable trader. Okay, so resistance supply zone is an area where sellers will step in, they'll sell, and price will reverse. Okay, so you can see here we hit this level 143.48, sold off, and then we tried breaking out again, but unfortunately we couldn't break out of that level, and then we sold off again. So that would be an example of our key resistance or supply zone. Support demand zone is basically the same thing, but at the buyer level. So usually what will happen is sellers will sell. You'll see some big selling happen, and then eventually that selling will slow down and price will begin to consolidate. The sellers get exhausted, the buyers step in, and they provide a floor for the price. You can see here that we have multiple candles that are supporting this level here. And the analogy that I like to use to understand support and resistance zones is, think of it like the floor and the roof of the house. Okay, the stronger the floor, the stronger the support is. So in this case, we have lots of candles to show some stronger support. Now, a common question I get is, where do you put these lines? First of all, it's not really a line. There's not a specific level. It's a zone. So it's an area where probability-wise, you'll see buyers step in and stabilize the price. So you want to look for areas where there's multiple candles supporting the price. The more candles, the better. In this case, we can see the price was stabilized for about a week or so. Now that we understand both of these terms, let me talk about the trading strategy. So basically, what you want to do is you want to identify these resistance and support zones, and then you want to wait for a shakeout. It's also called a liquidity grab or a liquidity sweep. And basically what that is you see selling happen. It's usually aggressive selling, and price goes below those key support levels. And usually what will happen is the people who have bought at those levels, and before their stops get hit, they potentially, they just give up. There's capitulation where they'll sell at a loss. And then there's max fear, panic in the market. And then this usually leads to the best opportunities. So you want to wait for a shakeout to happen. And then you want to look for confirmation where you see aggressive buying happen. In this case, we saw some aggressive buying that happened after earnings, and price was able to reclaim those support zones before going up and breaking out. So usually with the shakeout, there could be a catalyst, there could not be a catalyst. In this case, there is a catalyst with the earnings, but you can have an analyst downgrade, you can have some news come out. It doesn't have to be a catalyst, but you want to wait for the shakeout to happen. And then another common question I get is that how do you tell the difference between a shakeout and a breakdown? So let's say price breaks down and we make lower lows, continue to go down in price. Well, you wouldn't be able to tell the difference between a shakeout and a breakdown until after it's happened. You have to wait for confirmation. So in this case, we saw price reclaim the support before going back up. Now, if we didn't reclaim those levels, then that would be considered a breakdown. And you don't want to be in a position where that happens. So that's why I usually like to wait for confirmation. Hope this is helpful. Let me give you another example before we wrap up. Let's look at Tesla. You can see here we had a nice bull flag breakout. I've already identified the support and resistance zones. You can see here, this is our resistance zone, this is our support zone. We had earnings as our catalyst. We broke down from that support zone. However, we reclaimed it and we saw this big move to the upside. So this is a false breakdown. This was the shakeout that if you entered a position here, you would have done really well, made a lot of money. So I like to wait, look for these opportunities, and then be aggressive and enter these positions. It's worked very well for me. I think it's a great strategy. It's a very simple strategy. If you have any questions, thoughts, please don't hesitate to leave a comment below. Don't forget to like and subscribe, and thank you so much for watching.